Sometimes being the best in this business is not good enough anymore. And that's now the case with Texas Instruments, which fell 7.5% today, the worst performing S&P 500. Now, I have always loved the stock of Texas Instruments from the days when I felt they were the only semiconductor game in town. Of course, that was in the 80s. The July call options I bought while I was studying for the bar exam were my first $1,000 trade. And that's when $1,000 bought you more than a dinner for two in Manhattan. These days, though, Texas Instruments kind of feels like a relic, a company that makes really good industrial and automotive chips, so good that the Chinese insist on using them for many different things, especially their cars, and that's now become the benchmark of quality around the world. But there's a problem right now with Texas, as we call it on the trading desk. The auto and industrial markets are down in the dumps. Maybe they'll get stronger if the Fed keeps cutting interest rates. But maybe they won't. Maybe they languish because these markets are weak. Texans' earnings disappointed the Wall Street community. Now, Texas Instruments is an unusual company. It wants to be the best at what it does, and I'd argue that it is the best industrial and auto chip maker. What can it do if its end markets are weak? It's not the fault of Texas, for heaven's sake. They're just busy being great. But the analysts, they want more, much more. And they can't understand why Texas Instruments is content to remain the best house in an inconsistent neighborhood. I get the sense that Texan doesn't really care what the analysts want. This company sees them as nothing but armchair quarterbacks who don't know squat about the semiconductor business. Who's right? Look, if Texas Instruments were a private company, the answer would be easy. Management's right. Go bother someone else. They wouldn't even have to do a conference call. Privately held businesses are only accountable to themselves. But Texas Instruments is a public company, and a public company's job is to make money for its shareholders, and they're the owners. I'd argue that Texas Instruments isn't serving those shareholders well at the moment. If it wants to persist like this, management should just find a financier and take the company private. I prefer the way that Sanjay Mehrotra runs Micron, another semiconductor company. For so long as Micron's been around, it's been stuck with the rap of being a commodity semiconductor play, making non-proprietary chips that are as good as everybody else's non-proprietary chips. But that wasn't enough for Sanjay. First, he tried to make his chips more special. Tall order, the other guys do that too. But then he decided enough is enough. Micron started moving into high bandwidth memory chips for the data center. He makes the best of them. Sanjay wasn't content just to make them. He makes it so that everybody likes them, including NVIDIA. Micron stock was at around $9 when it introduced its first high-bandwidth memory chip. It's now over $100. Now, I'm absolutely convinced that if Texas Instruments wanted to, it could go beyond its cyclical nature. But it won't. It's content to remain as it is. It's just not content with the critics. It's kind of like they're an NFL team that's happy to have the best defense in the league, but no offense. Micron puts out both the offense and the defense. To me, the decision is easy. Go for Micron. After all, Texas Instruments doesn't seem to care for you. It doesn't seem to care if you don't like them. So there's no reason to own the stock unless you think that the company's really going to take itself private or put itself up for sale, and I don't think they're going to do that. Me, I want the complete team, offense and defense. So let's just say Texas Instruments management doesn't seem to respect its shareholders, and hey, today, the feeling is mutual. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here at Mad Money. I'm Jim Cramer. See you Monday.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.